Hello and welcome again. And today we are looking at how to find the story bias or the storyline or the directional bias for any market pair. All right, so I'm using Euro JPY today and not gold, so that you can understand that this thing works with a lot of asset pair or market assets. Now, um, so when you want to find your directional bias, you need two time frames. If you want to find the monthly bias for a particular asset, you need the monthly time frame and just the weekly time frame. All right. If you want to find the weekly bias for any market assets, you just need the weekly bias and the daily time frame, like the weekly time frame and the daily time frame. However, if you also want to find the daily time frame bias or the daily time frame storyline, you just need the daily time frame and the 4 hour time frame. It means that you need a primary time frame and a secondary time frame. Now, to find the storyline, what you are simply looking for is a rejection. Now, I want to find the storyline or the directional bias for this market assets, Euro JPY. I need a rejection. This current candle right now is still forming, and I cannot put my judgment on this candle entirely. But let me see where this rejection is coming from. I could just put the box out this way. Now, for some market assets, there is no data to the left. So this rejection, I might not really prioritize it. But because this asset has a data to the past, so I want to check if there's a key level is reacting from, first of all. That's the first thing I want to be bothered about or concerned about. I can see there's actually a level here that has not been used up in time past. If I should put my line there, let's see what is happening. Okay, so I can see that price is reacting off that level. Now, the question I want to ask myself is this rejection right now, okay, is there a break of structure? Is there a break of structure on the lower time frame? Do you understand? Then I'll put a line there as well. This is what? 15 July 2025. Now I'm going down the 4 hour time frame to check if there's a break. Now, today is what? Once again, today is, I lost that. Today is 15, right? Going down to my 4 hour time frame. This line is on the 14, so I adjust it back to the 15. Okay, so where did that tap occur? It happened inside this plate here. Now, at this point in time, all right, to confirm if the storyline has changed, because currently, if you can see, it's actually a bullish trend, like just looking at the whole thing without doing much analysis, this is a bullish up move, all right? But if you want to know if this now is descending into a bearish move, is that in this 4 hour time frame, you want to see price go below the last low that was formed before this rejection touch. Okay, and this is what you can see in your line charts. I want to just draw a box there or a line depending on whatever you're comfortable with. If we see price close below this level here with a full body close beneath this level, then we can say that the storyline has changed from a bullish trend to a bearish trend. It is that simple. All right, it is that simple. Now, let's um check out for more examples here. For more examples here. Now, okay, how about this case here? Now, at this point, when we had price here, we had price here. Now, you could just do this, put a line here, Normally, I would have been expecting price to have tapped this line to give us a break of structure downwards, but it didn't. It broke above this level here. And if you observe, when price closed above this level with a full body candle, we can see that price still came down to react from this level. So for the daily time frame again, if I was at the charts on this particular day, I would just go down to look for a rejection by first of all putting a line there on that particular day. That day is what 14th of July, right? Then I'll go to the 4 hour time frame. On the 4 hour time frame, I want to check if this line is on 14th of July. It's on 13, so I'll adjust it a bit to 14. Good. So on the 14, this was the point it tapped it on the 14, right? I'll ask myself, what was the last high that was formed? This guy here. And the moment you see price breaking above it, it happened here. These pin bars were seen 1, 2, 3, 4. These ones are not a complete close. We can see that the candle completely closed above that level on at this particular point. Because you can see the candle body above it. All right. Now, what else is this? So this signifies what? A bullish move. Is that simple? What about this point here? This point here, right? If I was at the charts at this point in time, let's say we saw this, put my level there, okay? I put this straight line there on that particular date, okay? That date was what? 10th of July, right? I go down my forward time frame. This is 9th of July. I shift it to 10th of July, looking for where the point it actually touched the line. So this was the first touch. I might want to take the second one. What was the last high? This guy here is the last high formed. Can you see? So until I see price close above this level, I would not call, all right? Until I see price close above this level here, I would not call, I won't say that my bias was bullish. At this point, the bias was still bearish. Because if you observe, at this point, we've not had any close above the last high that was formed before this touch. But when this guy finally closed above it, this candle, we can say that definitely then there has been a change in movement to a bullish side. Then you can say that okay, the story, the what do you call it, the daily bias is then what's bullish. You can see price coming down again to tap into that level and plan up finally. Even this levels, even this line too, okay, you can see that it's kind of overlap with the next day. So these are things you're watching out for. Great. Can you see that? So on the next day, it closed. You see. Now, do you know that if you actually go down the lower time frame on this touch here, you went down the lower time frame, you could still find a break of structure around here. Now, let me tell you something. Do you see this candle? This candle here breaking above this level. Let me show you something. Now, with this candle breaking above this level, let me zoom it properly. This candle and its entire wick, okay, closed above this bearish candle to the left. This is a candle break. Like when this is actually a candle break, and at this point in time, with this second bearish candle I'm seeing here, I can tell that okay, this is going to actually give me a bullish trend. But if I want to just be very, very patient, I could just wait until I see a proper break here above this level. Because if I go down to this area here, all right, on the lesser time frame, I would see a break of structure to the upside. Let me give you an example, like the 1 hour time frame. On the 1 hour time frame, can you see what? Can you see what? A break. Just watch that. Watch that. Watch that closely. You can see how price broke above this level here on the 1 hour time frame. So on the 1 hour time frame, a bullish trend started right away. The moment this candle here closed above it. At this point here, where my mouse is just gyrating about, there is no break yet until I see this body candle close above it. Do you understand? That's how this thing works. What if you're able to catch this guy here? You could have a ratio of what? Let's check it out. Just for example, all right? Just for example, but I would not enter on the 1 hour time frame personally myself. That is like 1/6, or sorry, 1/10 rather. All right, so what if I want to go down to a lower time frame? I could go down to my 15 minutes time frame, and on my 15 minutes time frame, okay, on my 15 minute time frame, you can see that at this point here, just watch carefully. Wow, watch carefully. Remember that this level was brought from the what? The 1 hour time frame, right? Now, did you observe that even with all these highs going over here, there has been no proper break at all, at all. Although price may have broken these ones, this, but you know, we're looking at the daily time frame and its bias, and that's why it's best to always use the 4 hour time frame as your secondary time frame to what? To confirm the bias of your what? Your daily time frame. Do you understand? But because sometimes you might feel like waiting over here might be too long, like waiting just to wait for this guy to get broken. You don't want to wait that number of hours. So you might want to go down again to a secondary time frame, such as a 1 hour time frame. Do you see now? So then instead of waiting for this level here, let's check where was that? Where was that? This level over here. So instead of waiting for this level over here, all right, I could go down to 1 hour time frame to see if I could check for an early entry, or let's say early opportunity. This guy here would be my first um attention grabber. I will not even, you could want to wait for this guy, maybe like, okay, for a double confirmation, breaking this one here, breaking this guy here, you feel like, okay, fine. If this guy, for example, now, this is a lot of entries. This video is going to be long. I'm sorry, but it has to be long for your sake. Can you see that how that when price broke it, it came down into that place? All right. But I'm not talking about entry right now. I'm talking about bias, finding your bias. So the moment price breaks above this, okay, that signals for me a bullish bias. And once I see a close above it, then probably I could go down to my 15 minutes time frame, maybe looking for an entry or something. I think it was when price closed above it finally. But unfortunately, we didn't have price coming down, like retracing down beneath it. Let me check my 5 minute time frame if there was an opportunity at all. There was no opportunity for price to actually had. There was no retests. There was no retests. There was no retests, unfortunately. So we just saw price breaking above and flying high. Now I'm knowing you're asking me a question, where did this guy come from? We put a line here, we can actually track where this guy came from. Go back to your forward time frame. All right. So for our time frame, let's see where that level came from. You can see that level came from where? This O and this gap here, this level here. That was where this price came from. All right. Okay. So I know you're asking me a question now. What if the charts was, what if I was here at this point in time on the charts? Can I do a replay? It won't allow me to go that far. So you will ask me, I know you would ask me, what if I was here at this point in time? That would be in another video. But okay, let me make it here. Let me make it here. Now, okay, you know what? I will make another video where I explained okay, I think I know what I will do. I'll make another video. In that video, I will try to make my 4 hour my primary time frame and my 1 hour my secondary time frame, or let's say my 3 hours my secondary time frame, and then the lesser time frame for let's say entries. All right. Okay. I'll stop the video here so it will be too long. All right. Please don't forget to subscribe to the channel and don't forget to share to your friends. Put your questions in the comment section. If you want a video specifically done for you, I can always make a video specifically done for you. If you need a free Zoom section, why not? I can always give you a free Zoom section. Yeah, just drop a comment. Thank you very, very, very much. Okay.